Hi, Ante here. In the light of recent Bitcoin all-time highs, the question that pops up the most is, of course, should I buy Bitcoin now? And the answer is yes. And that'll be all for today. Thanks for watching, keep mining, and I'll see you in another block. Well, turns out it's not that simple after all, but I'll try to help you decide in this video. What I will do today is share my thoughts on how to approach investing in such a dynamic market, based on my own experience over the past several years. First, we'll cover some historical data, and then we'll move on to some strategies and tips I used for entering and exiting the market. So, is it too late to buy Bitcoin? I personally don't think so. Investing in Bitcoin is not as simple as it seems, and it's not a money-making machine, as nobody can time the market and predict where the tops and the bottoms will be. Bitcoin's all-time high currently stands at around $42,000, whereas the previous one reached in December of 2017 was about $20,000. As you can see from this chart, we can almost recognize patterns in Bitcoin's price action. We'll call them market cycles. Market cycles usually last for 4 years, and it's most likely due to the process called the halving, last of which happened in May of 2020. If you want to learn more about the halving, you can check out the video that's popping up right now, where I cover what exactly the halving is. But basically, the halving cuts the newly mined supply released into the market by 50%, and does so every 4 years, which means that Bitcoin's scarcity is increased every 4 years, which has, historically speaking, increased the price. From the point of view of the main model for price determination, the supply and demand model, that certainly makes sense, since the new supply grows half as fast as before. And as we could see over the past year, the demand has been skyrocketing, especially among the institutional investors, such as Grayscale, whose Bitcoin Trust holds around 21 billion assets under management. They hold around 640 million shares, and each share equals 0.00095,028 Bitcoin, or 95,028 Satoshi, which means that if you multiply those two numbers, they hold over 600,000 Bitcoin, which is 2.8% of the entire Bitcoin supply of 21 million. So the institutional interest is there, but we'll cover more about the general demand in the next video, so stay tuned. What new investors usually do is invest in current trends and hype, and don't really understand the technology underneath, nor the market cycles. The worst thing you could do is invest just based on a rumor of somebody else making gains in the market, and then as soon as the price starts correcting, panic sell and immediately lose money. And I would always recommend doing your own research before committing to anything, and never invest in anything just because somebody told you to, especially a YouTuber. Understanding the investment is necessary and will go a long way in helping you keep yourself level-headed and composed during harsh market movements. Reading books is a good way to understand the tech behind Bitcoin. I've made a video recommending 5 books to start your journey with Bitcoin. You can check it out right here if you're interested. The safest way to invest in the cryptocurrency market, based on my own experience, is dollar cost averaging. Which means that you first have to define how much money are you willing to invest in the market, and then divide it into as many portions of the same size as you're comfortable with, and then enter the market on a regular basis. That will average out your entry price over time, but it will also give you an advantage in a way that if you invest your first portion and it blows up immediately, you can enjoy your gains right away. But if it turns south, it gives you an opportunity to buy at a lower price and obtain a better position over time. And a couple of more things. First, don't trade with emotion, as that is the quickest way to lose your money. And second, patience is key, and don't expect overnight riches. Or as our dear friend Warren Buffett, who by the way hates Bitcoin, says, investing is transferring money from the impatient to the patient. Next, historically speaking, buying dips for Bitcoin has proven to be very profitable. As you can see on this chart, there were several large corrections during the previous bull market. I've only marked 4, and they range from 30 to 41%. And I believe that we are just at the start of the next bull market. So whenever you go through a large correction, you can consider it as another point to grow your portfolio and get a better position. And since the market is fairly young, the price moves very aggressively as depicted in these screenshots. You can see that between the first and the second market cycle peak, there's almost 3,600% increase. And between the second and the third, there's almost a 1,600% increase. If you measure growth between market cycle lows to market cycle peaks, you can see that within the second market cycle, the growth has been more than 58,000%. For the second cycle, it has gone to 12,000%. And as of the current market cycle, it has only gone to 1,000%, so there's still room to grow. Exiting the market should be exercised in the same fashion as entering the market. Ideally, you'd be able to predict the market top, sell everything at the highest possible price, buy back lower if you want, and then take profits and enjoy your retirement. However, that's not how it goes, and as I mentioned previously, nobody can predict the market. So what I would do instead is set some exit points and then dollar cost average out, which means that I'll be taking some profits along the way as the market grows. Take into account where in the market cycle the price is, then define the market sentiment. Are we bullish? Are we bearish? Are there any fundamentals backing the growth or a correction for that matter? Are there any positive or negative news impacting the price? And so on. And definitely don't be greedy. Always make sure to pay yourself out along the way, because you don't want to be the person who has multiplied the position many times over and never took any profits, and therefore never realized any of those gains, because what goes up has to come down, and if you never took any profits, those profits are lost. Using that approach, you always put some money on the side, but also you give yourself an opportunity to enter the market back at a lower price. And finally, only invest the amount you can afford to lose. That will help you sleep at night and not fear over market movements, which might not always be in your favor. Also, if everything crashes, which by my estimation is not very likely, you will only lose the amount you'll survive without. However, if the price explodes, the upwards potential is enormous. And that seems to me a quite favorable risk to reward ratio. Thanks for watching. If you found value in this type of content, make sure to show it with a like, and also stay tuned for my next couple of videos where I'll be talking about why I think everybody should own at least some Bitcoin in their portfolios and exactly how and where to do it. So subscribe and don't miss any of it. Keep mining, and I'll see you in another block.